I think one of the reasons that a lot of companies in our space specifically haven't made the same breakthroughs, haven't been able to make the progress that we've made, is because they have two people, one a tech person, one a finance person, and it's really, really hard to talk to each other well or well enough to actually make these really complicated breakthroughs in machine learning research, which require in-depth understanding of the domain in order to inform your research approach. And that in-depth understanding needs to be integrated into your research approach, integrated into your product development, integrated into everything you do in order to achieve any sort of result.
Kris, welcome to Waterloo Grit. Thanks for being with us. To give you a sense of the lay of the land, we have amazing entrepreneurs who are going to listen and get inspired by your story and what you've done. So looking forward to chatting with you. I wanted to start off by asking you to give us a sense of who you are, what you've done, a bit of your background, and let's go from there.
Awesome. Thanks so much for having me. This is great. So I'm the CEO and founder of Bedrock AI, which, as you know, is a financial text processing startup. We serve mainly investors. But prior to working on Bedrock AI, I actually started my career as a CPA. I worked in financial statement audit. But my real passion was around economics and econometrics, securities regulation. And I had always wanted to do a degree in econometrics. I ended up turning that into, instead, a degree in data, got really involved in, Python programming, and did a degree, ended up transitioning to data science, worked for a number of years in corporate governance advisory. So very much still in the corporate realm, but working as a data scientist and also on the side as a Python programming instructor. And that experience was very much foundational in getting me here.
Yeah, which is an amazing story right there in itself, right? It's very rare that you come across someone with a CPA background who gets into tech. Or the other way around. So what was the motivation? Why did you jump into, and specifically Python, right? I'd love to hear what were you thinking when you got into it? What was your motivation? And a follow-up to that is, was it intimidating?
Right. Yeah. So I was lucky in that I was hanging out with a bunch of software developers at the time. And I think that was pretty helpful from the intimidation perspective, because when you're not involved in tech, I think a lot of people have this perception of programming and software developing being this really hard thing that only people who are Mark Zuckerberg can pull off. And then if you end up hanging out with enough software developers, you realize, not everyone's a genius and everyone's doing just fine. I just started getting into it bit by bit. I started out while I was still working in audit, just playing around with it and really enjoying it. When you're an auditor, you don't get to build anything. You don't actually get to see yourself adding value. And when you're coding, it's just this immediate feedback system. You can set up a web app in 10 minutes using Python and have it actually do something useful, which is totally addictive.
And had you done any courses in either in high school or a minor, or had you had any exposure to software development till then?
No, I did have a decent stats background, though. So from a data science perspective, I did have, a decent background in that side of the equation.
Got it. Yeah, and I just love the idea of how you were able to and still continue to operate in the intersection of these two fascinating realms. Um, so why Python? Why not, I don't know, R or something else?
Python is definitely just I think it's really the only good way to go if you're working in machine learning. These days, R is fantastic from a stats perspective. You know, if I was doing pure stats, I would definitely choose R over Python.
Got it.
But like, there's just the open source community for Python is way bigger, and there's way more support for all of the things you need to do compared to some other languages.
Understood. And this is great conversation by Tim Ferriss, which talks about, do you go the generalist route or do you go the specialized route, right? And I think it's interesting for entrepreneurs who are just starting their journey to figure out how much of a generalist should one be? Because at the end of the day, as you know best, as a CEO, you've got to keep your fingers in every department, every function of the organization, but at the same time be the master potentially of one, right? So, and eventually he concludes this conversation by saying, maybe the future is that of specialized generalists. So if you were to don that hat of a specialized generalist, would you think of yourself as a specialist in the financial realm or in the development realm, or the other way around? You think of yourself as a generalist, which I think you have to be because you're the CEO, but your specialization, does it change, I guess, on a day-to-day basis?
That's a really interesting question. And I find the areas in which I need to quote unquote specialize have evolved really rapidly over the course of, you know, our life as a business. When I started the company, it was just me. And all I did was code all day and try to get something working. And then, you know, Suhas Pai came in as co-founder, and he's a brilliant natural language processing practitioner. And he took away a lot of the more, you know, really technical machine learning work that I was doing. But I was still very much involved in the development. And that was how we worked for a good, you know, 8 months. And now the majority of my job is CEOing. You know, whether that's sales, content marketing, hiring, explaining to people what our platform does, how it works, a lot of interpersonal skills, which is, you know, a complete 180 from where I was focused, you know, fairly recently.
Right. Yeah, and you touched upon two interesting topics, and I'll come back to your co-founder in a second. What I'm interested in is a piece that you touched upon, right? The evolution of the CEO's mandate and style of functioning. You know, if you look at early stage entrepreneurs, and I think you guys are way past all that, but how do you, what advice would you give to founders in terms of being adaptable to changing their management style, right? As the company evolves, as you have more employees, as you have more customers, more traction, more money, stakeholder reporting upstairs to the board. Yeah, walk us through how that change has affected you and what you continue to do as you evolve as a CEO.
I think a big part of it for me was when I started out this path, my goal was to be, I had all these personal career goals that I wanted to fulfill through the business. And a lot of that was around becoming, you know, a respectable machine learning researcher. And as the business has evolved, my goals and aspirations have merged with what's best for the business.
Right.
And until they're sort of indistinguishable, but that was a transition. I think I was really attached to my technical role, probably for longer than I should have been. And at some point, I just said, you know what, I have to be a CEO as my primary focus. That's for the business. No looking back.
Right. Right. Then
Yeah.
going back to the co-founders, so I take it you have two co-founders, right? Or you have a CTO and a COO. And one thing I noticed
That's right.
was, I mean, obviously your CTO is the specialist in technology. Your COO also has a CPA, and very conveniently you have a foot in both, right? You're a lead developer. You are also a CPA. Is that a boon, a blessing, or is it difficult because it comes with its own bias and stuff like that?
So what do you mean from a bias perspective?
So let's say in the ideal world, if you don't have both those um, perspectives, and you're a pure generalist, let's say you're a strategy person, then you come on board and you completely delegate the work in terms of technology development to the CTO. Whereas here, and the other way around, to from an operations perspective. Whereas here, you actually have reasonably good insights into what the role entails. And therefore, do you think that there's an inherent bias in the way you think, and that translates into conversations with your founders in both sides?
So I think I'm clearly biased, but I think the way we operate, where all of us have technical expertise on both sides, is better. I think one of the reasons that a lot of companies in our space specifically haven't made the same breakthroughs, haven't been able to make the progress that we've made, is because they have two people, one a tech person, one a finance person, and it's really, really hard to talk to each other well enough to actually make these really complicated breakthroughs in machine learning research, which require in-depth understanding of the domain in order to inform your research approach. And that in-depth understanding needs to be integrated into your research approach, integrated into your product development, integrated into everything you do in order to achieve any sort of result. And we saw that for a while. I mean, we spent months with absolutely nothing working at all. And, we are obviously have a lot of very specific expertise in this area. And I attribute our eventual success to the fact that Suhas is a very domain-focused approach to research. I am a financial expert with a lot of machine learning capabilities, and that was what got us to where we are.
So that's such an interesting perspective, in the sense, and maybe this is how I'd love for you to give advice to our founders, right? If you hustle in the trenches to try and develop a solution, a product, sorry, that addresses a solution to a problem that you started chasing, are you better off as an early stage founder trying to figure out what that fit is, that minimum viable product that specifically addresses a problem? Or do you get to a point where you say, you know what, maybe we're chasing a problem that A cannot be solved, or B is not large enough, and therefore we've got to shift our goalpost. In your experience, what drove you to staying the course?
So we were convinced of the magnitude of the problem the whole time. And, I'm not, I think there a lot of people would have given up not having seen results from our research early on. Because, machine learning research is non-deterministic. If you're developing an app that's going to let people buy cars online or help people date or any of that, you build it. You make a design, you build it, and it's built. But we were relying on something that we believed was possible but hadn't proved yet. So it's very much, our process is a lot more like, development of a new pharmaceutical or biotech or something like that, where it's more of a moonshot idea, and it's about your passion for the topic, the belief that there is a solution out there, that you can make the breakthrough. But success is just creation of the actual product that solves the problem is by no means guaranteed.
Got it. Yeah, and I would love to double click on that, right? For our audience who are that's not conversed with machine learning, just to simplistically break it down, and please correct me if I'm wrong. I would say the challenge would be you got to build a model and iterate that model multiple times, and B, you've got to train that model, and then C, in real time, you give it data, and the model spits out based off of training data set, it figures out solutions. So in your case, quite like the example that you cited, the challenge is, I guess, to do A, B, and C over and over. Would that be the way to think about it? Did you get it right?
Yeah, so I can go. So to give a bit more depth about the specific challenges we were facing, so we're using deep learning based language models on our back ends, and we're using these language models to read and understand really complicated financial disclosure, financial and legal disclosure from corporate entities. For the people who aren't familiar with language models, these models convert words and sentences to mathematical vectors or embeddings that represent meaning. They're incredibly powerful. Probably most people who are listening are already aware of them. They're already aware of OpenAI, GPT-3. So, obviously, what's possible with this new technology is incredible. There's so much opportunity here, and I think that's clear to anyone who's been paying attention to the field. But there's a whole bunch of limitations to these models and a whole bunch of things that, haven't really been solved by the community. The most obviously one of those, or most talked about, is of course bias. They're incredibly racist, sexist, all sorts of fun stuff. But for us, less of a problem because we're dealing with financial data. But for us, some of the challenges what we were dealing with is these models don't perform well on long form text. And we're also dealing with a situation where, in order to understand what's going on, the human being reading it needs to have a really, really high degree of expertise. And it's really challenging to disambiguate between what's important and what's unimportant. The unimportant stuff is linguistically and structurally very similar to the stuff that matters. So that disambiguation task is really, really challenging. So we can't just take a model that exists in open source and run it a whole bunch of times and go, oh, I hope it will work. We need to use really innovative, creative solutions to try to go somewhere that, the research community hasn't yet.
Yeah, this is amazing, but at multiple levels, right? When you think of entrepreneurs who are trying to find that beachhead, right? And then make an entry point and start scaling. And you look at what you guys have done, I find it amazing that we are dealing with data that's potentially not publicly available. Number two, it's unstructured. So how do you create a beachhead? How do you go around talking and enticing?
It is publicly available.
Oh, it is, okay. So how do you land your first customer? Because your model is not yet fully tested and ready yet. And at the same time, you also want the customer to sort of buy into this dream that you want to sell, right? So how do you make that first sale, or how did you make that first sale?
So we got our beta users through inbounds. We got if you press mentions one early, I did an interview with Alex Danko, who I believe you know of at least, and his Substack is read by 1 million people, including hedge funds and this, that, and the other thing. So we got a whole bunch of inbounds for interviews and things like that, and that's how we got our first beta users. We were fairly selective in that process, and then of their bit, of course, the product was very early, and there was a higher degree of noise than there are now. But fortunately, there were a few people in that beta group who, needed the solution so badly that they were willing to put up with the early nature and did end up paying for it for actually in a way that was very exciting at the time,
Right.
given it's a full price point and on all of that.
Got it.
Yeah.
And a question there, which often entrepreneurs struggle with, right? Were you okay if the if the pilot would have been not paid, or would you have maintained discipline to say you got to pay us something to show skin in the game?
So, yeah, coming out of beta, we kicked everybody out if they didn't pay.
Got it.
I think we were maybe, because of some early successes, we were maybe a bit too confident that our product was awesome at the time.
Right.
So we weren't afraid of kicking people out.
Yeah.
And I'm not even sure that was the right move. It is really important to get that early feedback and make sure that your product is useful to a wide variety of users.
Yeah, but it also comes, like you said, with the subconscious discipline, right? So the team can focus on where there's return on that investment. And oftentimes, I guess entrepreneurs struggle with the idea of here's a bunch of paying customers, here's a bunch of potential pilots that may translate to revenue. And where do you choose your lane that lands you with this high frequency customer, which then becomes your product market fit, right? It's so nebulous. And I often wonder.
Yeah, and we've definitely had conversations about this internally and also with our Y Combinator partners of at what point is it, if this is a really big fish, they're a really huge company, is it worth us spending X amount of time letting them on for this long for free, this, that, and the other? And really the conclusion we've come to is we only let someone on the platform if they're a part of our current customer base or just outside of it. And if they're just outside of it, they better be willing to give a ton of feedback because they're not going to convert, right? We haven't built for that yet. The reason we're letting them on for free is only if they're going to be incredibly helpful to our development process. And then we only let somebody stay on for free, if they're providing useful feedback on the product, they're logging in weekly or daily, and we're really seeing that engagement. We can track their usage. We're using that information to improve our product actively, and then everyone else just cut them, focus.
Yeah, it makes a lot of sense.
Yeah.
And maybe this is a great time for you to talk about Bedrock, right? And the value proposition for the dashboard, the filings of interest, watch list, the third one that you had highlighted on the web.
So fundamentally, what we do, Bedrock AI is software that extracts hard to find information from securities filings or corporate filings. So think of a 10K annual report. Our focus currently is on extracting information that's predictive or indicative of downside risk, crisis, specifically malfeasance, fraud, earnings manipulation, those types of bad events. And we currently serve our customers through a SaaS-based model. We have a web dashboard where our institutional customers can access, over 7,000 different tickers or stocks. And we update our platform in real time as new filings get posted. So we're processing an enormous amount of information every day. And instead of the investor spending 3 hours going through some of these filings, we process them in a matter of seconds and can show our users the information they need to see immediately. And just one note for people who may not be familiar with the space, which I think is a lot of people, even if you are involved in retail investing, most people think of financial information as being primarily numeric, but all publicly listed companies have to disclose and put out an enormous amount of textual information, just disclosure. The average annual report in the US is longer than Shakespeare's Hamlet. It's absurd. It's an overwhelming amount of information. There is really important disclosure, context for the numbers you're seeing. The financial statements essentially are meaningless unless you have a lot of the context around accounting policy, around the parties involved in the transactions, whether or not collateral for the loan is actually gone missing or gone up in flames, things like that. And because there's such a huge compliance burden and so much new disclosure being packed into these, investment professionals just do not have the time to be able to effectively process all of this information from a human perspective.
Makes sense. Absolutely.
Yeah.
Yeah. Thanks for really breaking that down to us. A follow-up question there was a very interesting commentary, right, on your website, which talks about short sellers and hedge funds, and your ability to sniff out corporate fraud. And I was keen to get your view on, what the world went through early this year with the whole GameStop episode. And it was fascinating at multiple levels, right? One was the idea of how large hedge funds can be really brought to their knees by this sort of democratized indie subreddit folks. And the other is how much information out there and the analysis and synthesis of which would potentially have prevented this, either for the fund, either for the hedge fund or the asset manager who had to pump in a lot of money, or even for retail investors. So you have a sense of, I guess, two questions, right? If you can walk us through how you folks can play a role, Bedrock plays a role, and in the future, do you see yourselves playing a larger role?
Definitely. I think to answer your question last, we definitely see ourselves playing a larger role going forward. Our mission is corporate accountability through information transparency. We really want the information about corporate entities, about stocks being more, better understood, a lot more accessible to a lot more people. That said, the GameStop saga is so interesting. As you mentioned, our focus is malfeasance and fraud. A lot of short sellers are looking for fraud specifically as a thesis of, this stock is going to decrease in price because people will eventually realize this is a sham. But GameStop wasn't a fraud.
Right.
No one was betting against GameStop because, GameStop was a failing business that was they were failing in a way that was honest. I don't think anyone was accusing them of manipulating earnings or being aggressive. They were just a sort of humdrum company. And people were betting that the stock would go down because, it's COVID and who's going to go into a retail store that sells, what is it, video games?
Yeah, games, yeah.
Yeah, so I just, like, it seemed like a solid short thesis, and then a whole bunch of people decided that they wanted to buy the stock,
Sure.
and it's just this most incredible, strange market phenomenon that has never happened before, and looks to continue to happen. And I mean, the sort of retail excitement about very specific stocks for reasons that don't necessarily make sense to a lot of market participants is, I don't think we specifically have a role
Got it.
there. Like our role is very much about, understanding the true fundamentals of the business. Retail investors really analyze the true fundamentals of the business. But I don't know if that discussion would have or could have played into a GameStop situation, because no one was talking about the fundamentals of the business. It was stonks, rocket, let's all buy this, let's try to do a gamma squeeze, a short squeeze, and none of that stuff really ever materially impacted the stock price, it looks like, based on the SEC investigation into it. It was just a whole bunch of people who were psyched and bought the stock together.
Yeah, I agree with you, right? I mean, I don't know if there's any intentional malfeasance there, but these guys figured out a way to hack the system uh, in order to make money. In your roadmap, Kris, do you ever see, you don't have to answer this if it's uh, too cool to be answered, but do you ever see yourself developing an application that eventually ends up in the hands of the consumer? Especially now, right? I mean, you look at when I constantly come across individual investors who are in crypto, they don't understand what is crypto, what it's supposed to do, what are the risks, disclosure statements by all these new coins that
Yep.
are being formulated. So do you ever see yourselves playing a role in the hands
Yeah, and I think that's a great
of
point.
an
It's just we
individual?
see individuals becoming a lot more sophisticated than they ever were, and a lot more focused on due diligence. And I think there's some actually very talented retail investors out there. We have, of course, talked about, is there room for us to create a retail tool? What would that look like? How would we implement that? For now, our focus is on institutional investors, financial institutions, etc. The reason we've made that choice is, in general, the people who care about risk, who care about malfeasance, who care about crisis, are much more concentrated in the professional side. And that's just where we see a lot more demand. I think potentially in the future, we could create some sort of ancillary tool for our retail audience. Our concerns are more around, how do we make sure it's explainable? How do we make sure that, they're actually able to interpret these results, that no one's seeing us highlight risks, going out, shorting a stock, losing all of their money. And those risks to us are a lot lower if we're focused exclusively on professionals.
Great.
Yeah.
Yep, makes sense. Yeah, and then thanks for bringing that up. Switching topics a bit, you folks went through a fundraise recently. Um, Walk us through that exercise. How cathartic was that?
Yeah. I think every founder is always nervous about fundraising. You always will know what if no one else buys into this idea.
Mhm.
But I'd been through the Accelerator Center, the Jumpstart program, and I just finished Y Combinator, and Y Combinator makes it so easy to raise, and I am incredibly thankful to them. They have their demo day process set up, but because we were in Y Combinator, because we got featured in Hacker News, because of all of this, we didn't have to reach out to one investor. We had I don't know, 40 investor meetings more set up before demo day even happened.
Mm-hmm.
I think in one day in 2 days I did 22 investor meetings. There was just a ton of interest in our space, a ton of interest in the idea, and it made fundraising really comparatively very, very low stress.
Mm-hmm.
So it was awesome. Yeah. Completely virtual.
Completely virtual, right?
Yeah. Otherwise, how would I have done 22
That's
investor
amazing.
meetings in 2 days? Yeah. Yeah.
Right. Yeah, so that's
Thank you.
amazing. And congratulations. Um, the experience of the ease of fundraise, do you think is attributable to the US slash the Valley being what it is? Or you think it's YC or a
I think it's a
combination of the
combination
two?
of the two. I think now is a really good time to be fundraising as a startup. It's a pretty
Mm-hmm.
hot market. There's just a lot of money in the venture capital realm. And we were able to take advantage of that.
Yeah.
Y Combinator does a really good job of forcing investors to move quickly because they do feel like they're competing
Mm-hmm.
to get onto your cap table,
Mm-hmm.
which really shortens timelines. You know, we were essentially able to get nearly everything done in about 3 weeks, which is, you know, it's awesome. That's awesome.
It's
And
remarkable.
that was because of, you know, Y Combinator has essentially created this artificial time pressure where, you know, these companies graduate at this time. If you're not on their radar and on
Mm-hmm.
their cap table, you know, by that time, you're probably going to miss out. Yeah.
Right, right. Yeah. And did you have to say no
We
to
did
money?
say no to money. Yeah. Which is,
Got it.
yeah.
That's a great place to be. Not because you're saying no to money, because it gives you a sense of external validation, right? It's one thing for entrepreneurs to just fall in love with what they do, but when you have external investors who are lining up to invest and build the story with you, the ability to say no because you want to, keep things honest and intact is very commendable.
Yeah, it does feel good. Y Combinator throughout the whole process
Mm-hmm.
repeated to us, if you do well in fundraising, it has absolutely no correlation with your success. People who do too well in fundraising spend all of their money, make poor decisions, and end up highly diluted. And they just repeat that to you
Right.
over and over and over and over again. So I think we feel generally more humble about, wow, this was easy. We're so
Mm-hmm.
glad that we didn't have to spend time away from our business to get this, rather than the fact that investors like us means that we're more likely to succeed.
Mm-hmm.
Yeah.
Yeah, and that is such a true and honest statement. I've sat on both sides as an entrepreneur who raised money and couldn't successfully give my investors an exit. I've also sat on the other side as an investor trying to tell the entrepreneurs, stay focused and humble because it's so easy to get lost in the picture, right? I mean, at the end of the day, the woods still need to have trees. So focus on
Yeah.
keep your focus on the trees. Um, from your experience, Kris, the having been exposed to both ecosystems, and I mean geographically, the US and Canada, what would you highlight are stark differences?
Yeah. So we only have one Canadian investor on our cap table. The reason being wasn't that we didn't talk to
Mm-hmm.
any Canadian investors or Canadian investors weren't interested. It's just that by the time we closed our round or were approaching closing our round, none of the Canadian investors had finished doing their due diligence. So,
Mm.
whereas in the US and internationally, seed stage Y Combinator companies are generally not subject to due diligence. To illustrate that point, some of the investment we got was through investors who never, to this day, have never met me. They've never talked to me. They said, we'd like to invest, give us your best terms. So that's quite extreme. But a more general process for a U.S. investor who's used to investing in Y Combinator companies, they'll meet you once for half an hour, decide if they like you, bring in their partner or another two partners, meet you with you a second time, make sure everybody else is on board, you get the money. Obviously in exchange for the investment. But it's very smooth, it's very low effort, whereas Canadian investors tend to, actually do due diligence. They're not necessarily looking through your financials in depth, but they ask for financials. They have you talk to customers or pitch to customers in front of them. There's just a lot more happening and required in order for that to get a Canadian investor to open their purse strings.
Mm-hmm. Yeah, I know exactly what you're saying. And the follow-up question there is, what do you think is your runway to the next Series A or pre-Series A institutional round?
So we have about 22 months of runway, but our goal is to get to Series A in about 16 or 17 months. Yep.
Makes sense. I keep telling entrepreneurs, I think about a decade ago or even half a decade ago, entrepreneurs had the luxury of spend time fundraising, which can often be a distraction. Once you raise the money and the money hits the bank, focus on building the business, year or two later, go back to fundraising. But now I think we live in a world where you've got to allocate a certain percentage of your bandwidth for a fundraising period, like right throughout. Keep speaking to investors, even if you're not proactively fundraising, but the ability to extricate ideas from the investors' heads is so worth it. So do you buy into that theory, or would you say double down on the business, focus, and like you said, a few months later, get back on the saddle and go fundraising?
I definitely subscribe to the latter theory. That said, okay, so I would say we spend a lot of time talking to our investors who have deep expertise in the business, in finance, in markets, because they have an incentive to help us, and they do often. So we do spend a fair bit of time, but that's because it helps our business actively. But my perspective is, if we create a business with high growth that's doing really, really well, we're going to be able to fundraise. So it won't matter how much time I spend chatting with investors in the interim. If the business is strong, I'm going to be able we're going to be able to raise.
Yeah, no, touche, well said. I agree with you. I know we're up against time. I wish we could keep this conversation going, but on a parting note, what would be the one sentence or one word advice that you have for entrepreneurs who have a product, they're trying to figure out who their customers are, and they're on the cusp of scaling, but they don't know it yet?
Ooh, one sentence. I would say, the advice I would give is embrace the pain. Embrace the discomfort. It's not going to be fun. In order to succeed, you need to go through a lot of, failing, a lot of it, having people shatter your hopes and dreams. Again and again and again. And running a startup is a lot like being an endurance athlete. It's just, can you get up again and try again? Because no one's succeeding their first go round. in any sort of disruptive industry.
Yeah, spot on. Couldn't agree more. Fully appreciate it. Completely agree with you. Um, it's been absolutely a pleasure talking to you, Kris. Thank you for taking time out. And we look forward to potentially bringing you back here. Good luck with everything that you're doing,
Thank
and
you so
wish you all the
much.
very
This was
best.
really, really fun.